How are you guys doing today? Today, I want to take the time and once a week, I want to talk about current events regarding debt collections as well as credit. So I have two things out there for those of you who live in New York, some good news for you there, as well as in general with regards to debt, something that can help a lot of people like veterans, as well as I have something as far as the credit industry goes with those who are a little disenfranchised or our credit is not so good. So stay tuned. My name is Jay, and welcome to As a Debt Collector. Now, I've been in the debt collection industry for over 15 years. I've done it all, from skip tracing to collecting to management, and I've owned 2 debt collection agencies. For the past 8 years, I've been the go-to guy for friends and family for questions regarding debt and credit, and now I want to be that person for you. If you have any questions, put them down in the comments section. I promise I'll answer those questions. Let's go. If you haven't had the time, be sure to take the time to like and subscribe this video. Obviously, it'll help me with regards to bringing more and more content to you guys. We'll start with New York first. Now, the governor, Andrew Cuomo, signed legislation protecting New Yorkers' COVID-19 stimulus payments from being garnished by debt collectors. That is some awesome news for those of you who live in New York. So basically, obviously the stimulus check comes. It's supposed to help people with kids and family, just sort of kind of stimulate the economy and so forth. And nothing's worse than thinking that you're going to get that and all of a sudden some debt collection agency is garnishing that payment. Now, it's one thing when you can actually contact the debt collection agency themselves and make some type of arrangement with regards to a settlement, but it's a total different situation when they take the money from you. And the reality is, as a debt collector, when money is garnished, we're taking balance in full, which takes away your power to the balance. Reverse, if you got the $1,400 and you contacted the company, you owe $2,000, you may be able to get away with paying $800-900. So this is some good information. I'm gonna put down in the description if you have questions with regards to, so New Yorkers with questions about protections can call the New York Department of Financial Services Consumer Assistant. The toll-free number is 800-342-3736, or send an email to consumer@dfs.ny.gov. I'll put that down in the descriptions for you with regards to that. And another thing, anyone who's had their stimulus payment taken by a debt collector after May 13th in 2021 should file a complaint with the New York Department of Financial Services. And I'll put this down in the thing. It's at dfs.ny.gov/complaint. Put your information there. So the reality is, I know this is only for New York, but typically how laws are passed and legislation is passed, a lot of times it starts either in New York or California, and it sort of kind of make its way through mainly the blue states, and then hopefully the red states. Okay, so the House bill aims to protect consumers from debt collector harassment. Now, me being in the debt collection industry, that's one of the things that you hear throughout the industry is people harassing debt collectors. I have a video explaining how many times a debt collector can call you and how much control you have as a consumer with regards to collectors calling you, harassing you. It's not something that I condone. I think that it is very, very messed up. The reality is, personally, me, when I would call consumers, the reality is, if I get you on the phone and you can't pay, you're better off just telling me you can't pay or than telling me, hey, call me back or anything along those lines. That'll help with the harassment, but I know that there are collectors out there who abuse it. So on behalf of the debt collectors, I'll apologize to you. The bill, which is endorsed by the Biden administration, would require debt collectors to seek consent from consumers before sending them electronic communications. It would also prohibit debt collectors from representing to service members that failure to cooperate with the debt could jeopardize their military rank or status. Now, the reality is, I remember whenever we would collect, sometimes people will be happy when we got people in the military, people who serve our country, because if they don't pay their debt, it can hurt their rank. Now, this bill here is going to put into place to help you people who are in the military, currently in the military, to where debt collectors can't call you and harass you and doing that. The bill would also prohibit credit reporting agencies from including debt arising from medically necessary procedures on consumer credit reports. I think in the state of California, if I'm not correct, medical bills cannot be reported on your credit report anymore, so that won't hurt you. As we know, the medical bills can balloon if you get sick or something happens and your insurance doesn't cover it, or you don't have insurance. You can easily have a bill of $500,000 and be paying that for the rest of your life. So this is great. And it will require discharge of consumer private student loan in the event of death or total and permanent disability. So if you die or you become injured and you're on disability permanently, only on private. You got to understand, private loans is a lot different from government loans, but hey, that is a step in a good place for those types of people. Now, lastly, this is something that can help a lot of people with regards to credit in general. Now, JP Morgan Chase, Wells Fargo, and U.S. Bank are among the big U.S. banks working on a government initiative to get credit into the hands of people with no or low credit scores. This is from the Wall Street Journal. It was reported on the 13th, citing sources, right? So the reality is what's happening is these big banks are trying to get money to basically, like I said, disenfranchised or low credit people. The reality is there is a large amount of people, and I believe I'm going to read the statistics on that. There are about 53 million adults in the country here in the United States that don't have regular credit scores, according to the Fair Isaac Corp, the company behind the FICO credit scores. I've explained that. If you want to know what FICO is, check that video out per the Journal. A report from the Consumer Finance Protection Bureau indicates that Black and Hispanic adults are more likely than any other group to lack credit scores. A lot of times because in those communities, like I stated before, I've stated it in a video, when we're younger, we always think cash is king. We don't know anything about credit. It's not taught in schools, so the reality is you don't learn about it. So if your mom never had a credit card or didn't understand it, I was always taught that credit was bad, right? It's like, no, don't get no credit cards because I'm going to get in debt. And obviously, if you use credit cards the way they're supposed to be used or designed to be used, it can be a very beneficial for yourself. But this is great that they're obviously extending this to those 53 million Americans out there, Chase, Wells Fargo, U.S. Bank, to extend credit to these people, because a lot of them don't even have credit. They pay cash for everything and they never establish credit. And so this is something that'll help you out with regards to that. The plan is to launch a pilot program sometime before the year is out. The banks will determine credit worthiness based on people's account balances and overdraft history, the source told the Wall Street Journal. So basically, your credit will be predicated on your balance in your checking account. So obviously having a checking account for those of you who are there who may have bad credit, and you have cash that's going in and out of your account. You don't have too many NSFs or overdrawn bank account. Your bank account's not overdrawn, then they'll determine it that way. Another thing that I think that they should factor in, which I've read not too long ago, is people who pay rent. That's not reported on your credit report. As we know, especially people who live in New York, California, rents are very high. People are paying $1,900, $2,200 a month for rent, but it's not being reported to your credit report. While people's mortgages can be even less than that, $1,500 and $1,600, and that's being reported on your credit report. I believe people's rent should be reported on their credit report. Another thing is a new scoring system was developed by FICO that now takes into account how people manage their money overall. No financial institution went for the idea. A few lenders signed on, is what was told from the Wall Street Journal. So as you know, things are starting to change with regards to the credit industry. I don't know if you guys seen that. They're trying to change the FICO score to include a lot of things like power and electric bill being added on there, obviously your rent being paid and being added on there, possibly your cell phone. And there are ways that you can get some of those things on there, but it being mandatory because it'll help so many people. There are a lot of people who pay for cash for a lot of things, and to get credit for what they pay will help you with your FICO score and get in a better situation. Now, if you have any questions, put them down in the comment section. I promise you I'll answer those questions. Don't forget to like and subscribe, and always, you be great.